used in tractor will come down and move into 5% slab. So which all companies will be biggest beneficiaries? First one is Maruti, because it has the huge exposure in small car segment. Also amongst beneficiaries are Tata Motors and Hyundai. In the bike segment, Eicher Motors will be the biggest beneficiary because almost 86% of its total contribution come from bikes having capacity less than 350cc, and followed by that Hero Moto, Bajaj Auto and TVS Motor. In three-wheeler also move into 18% category. Bajaj Auto and TVS will be biggest beneficiaries. Armored vehicles move into 5% category, and Tata Motors and Bharat Forge are expected to benefit. Bus also moves into 18% category, and Ashok Leyland and Tata Motors are biggest suppliers in the bus segment. Tires also move to 18%. So Apollo Tires, MRF, Seat, Balkrishna Industries will benefit the most because tires used in tractor segment will move.
Hi, I am Rahul. I work as a software engineer, and because of my profession, I used to spend a lot of time staring at screens. Glasses were always in the way, whether it was during workout, while traveling, or even just relaxing and watching a movie. A friend of mine had a contact LASIK at Vasan Eye Care, and she had great experience. I decided to check it out. Honestly, I was nervous, but the moment I walked in, I felt reassured. The doctor explained the entire control LASIK process. It took around 10 to 15 minutes. I was sitting up and walking out within half an hour. I could see clearly, and honestly, my vision is sharp and I feel more confident and free. If you had thought about a control LASIK, go for a consultation. Vasan Eye Care. Experience the joy of clear vision.
A uniform 5% rate for most of these inputs now. Man-made fiber earlier was 18%, moved to 5%. Man-made yarn earlier 12%, now moved to 5% as well. Now, reducing these rates will obviously benefit and lead to a reduction in the manufacturing costs for the finished products as well. So other than that, we're seeing a reduction even in terms of finished products. So whether you look at carpets, rugs, bath linens, even apparel products, where we've seen a reduction coming in terms of the GST rates. For finished products, there's a reduction coming to 5% as well from previous 12%. Specifically for apparels, there's a GST of 5% on apparel products not exceeding 2,500 rupees. This turns out to be positive for Wellspun Living, Indocount, KPR Mills, Gokuldas Exports, Vardhaman Textile, Nitin Spinners, among some of these textile players.
All right, Vinny, thank you very much for that. Consumer durables is what we're going to focus on next. Upasana is here with impact on stocks. Upasana, over to you.
Good morning. Well, it's a big consumption boost with the onset of the festive season, especially. Let us look at the key categories that will be in focus on the back of the GST rate cut. AC, large TV above 32 inches, dishwashers, solar water heater. The GST on this is reduced to 18% from 28%, while other categories such as smartphones, refrigerators, small screen TVs, washing machines, microwave continue at 18% slab. Now, this big consumption boost is likely to increase the affordability for the consumers, especially ahead of the festive season, and lower GST directly stimulates the demand for ACs and large TVs, expanding the market size for domestic producers. Now, according to Elara Capital, RAC demand may rise minimum by 10 to 15% on the back of this, and RAC OEMs like Amber Enterprises, PG Electroplast, EPAC Durables may see spurt in volume growth on the back of this. Now, coming to TV category, there is no direct beneficiary here, but Dixon Tech will be in focus as it assembles TV for numerous brands in India. This might see a spurt in volume on the back of this in H2 FY26. Solar water heater, lastly coming there, it is a growing market in India, though it's not that substantial, but it is picking up, and key beneficiaries here would be V-Guard and Havells. So overall, it is a positive move for consumer durable sector.
Okay, all right, got it. Thanks very much, Upasana, for that. Back to Vinny. Pharma, healthcare, a whole range of medical equipment or consumables in hospitals. The GST has gone down on all of them. Vinny, fill us in.
Absolutely. So in terms of GST on medicines, all medicines has now come to 5% from previous 12%. There are 33 life-saving or important drugs that you could call, right? Out of that, 30 drugs are oncology drugs where there was a 12% GST previously. Now it's come down to nil. And there are 3 other life-saving drugs across different categories, which has been reduced from 5% to nil as well. So nil on important life-saving drugs. Now, medical equipment, that's an important one as well. GST has been reduced from 12% to 5% for these medical equipments, whether you look at diagnostic kits, blood glucose monitors, surgical devices, bandages, among some of them which I'm naming right now in the medical equipment have seen a reduction as well. Now, obviously, this turns out to be positive for Polymedicure. Diagnostic companies also will benefit from this. So, Dr. Lal, Metropolis Healthcare, and other than that, companies that are domestic facing pharma companies that are domestic facing, so Torrent Pharma, Abbott, Cipla, Zydus Life, Lupin, Sun Pharma will also benefit from the change in the drug prices.
All right, Vinny, thanks very much for that. Fertilizers and chemicals next. Vamakshi's got that. Vamakshi, morning.
Good morning, Prashant. Good news for fertilizer as well as agri-chem companies because, the inverted duty structure in chemicals has been corrected by reducing GST from 18% to 5% on sulfuric acid, nitric acid, as well as ammonia. Now, this in turn bodes well for companies like Deepak Fertilizers, GNFC, Chambal Fertilizers, Coromandel, RCF, National Fertilizers, Paradeep Phosphates, FACT, Southern Petrochem, etc. Other than that, micronutrients as well as agri inputs, the GST out here has been cut from 12% to 5%. And this in turn is positive for companies like UPL, PI Industries, Rallis, all of these agrochemical name, Bayer, Crop Science, Dhanuka, Best Agri Life, etc. Now, keep in mind that these rates will be effective from 22nd of September onwards. And if we look at the impact, the reduction in input cost as well as the working capital relief as a result of correction in the inverted duty structure means better margins for fertilizer companies. And the second important impact is that it also improves affordability as well as demand uptick for micronutrients as well as agri inputs.
Okay, it's a turbocharged booster shot across sectors, across companies. But how can we end without talking about FMCG? Those hair oils, the Maggi noodles, the chocolates, so on and so forth. Manglam, big day.
Big day. All the staples have been, brought under the 5% mark for GST. And that's a big positive. Why do we say that? Even if the companies go ahead and pass on, as is expected, all the benefits to the consumers, we will see increased boost coming, especially in the staple space. And that's what the FMCG stocks have been expecting over the last 10 or 15 days or so as well. So we have, HUL, Dabur, GCPL, Imami. Don't lose sight of something like a Bikaji as well, because all your bhujia and prepackaged namkeen, etc., would come down from 12% to 5%. For nearly the entire portfolio of names that I just spoke about, all the rates have come down to 5% from 18%. So hair oil, shampoo, toothpaste, toilet bar, we have toothbrushes, shaving cream, all of them down from 18% to around 5%. Biscuits stand to benefit as well. The bigger benefit comes in from ITC, or that's, because one, there is no incremental tax on tobacco. And secondly, some of its products, the likes of pencils, sharpeners, crayons, pastels, exercise books and notebooks have come down to nil. So that's a positive for them. The only fly in the ointment here would perhaps be something like a Varun Beverages. And the reason why I say that is because aerated beverages have been moved to 40% as against 20%. So the stock may be slightly negatively impacted, but a large part of the street, in fact, the entire street was penciling for that already. So barring Varun Beverages, all the other companies stand to benefit as the taxes are down to 5%.
And Manglam, just very quickly, specifically on ITC, when it comes to cigarette taxation, no changes, because I think there the compensation cess continues for some time.
The compensation cess continues. So currently what the regime is 28% GST, plus you have the basic excise duty, you have the NCCD, and you have the cess, which is basically a function of fixed and ad valorem, which is a proportion of the prices. Now, with the 28% having gone to 40%, there will be concomitant changes made to the other part of the taxes, so as to the overall incidence remains the same. Because if there is more incidence of tax on tobacco, then perhaps, there is risk of illegal or contraband gaining further market share, and the government itself losing some sort of revenue. So it's only mature that it is tax neutral, and that's exactly what is understood so far from the details that we have.
All right, Mangalam, thank you very much for that. Just want to put out some views which are coming. Actually, there'll be lots of views through the course of the day, but some street views, right? So this is Vikas Jain of CLSA, who writes this morning. He says the estimated reduction in the tax burden or increase in disposable income for consumers from these cuts equates to 30 basis points of GDP. This comes after a large income tax cut and multiple interest rate cuts over the last few months. This is the third significant consumption boost and gives impetus to our call for consumption stocks over capex plays. It goes on to say that lower indirect taxes will lower working capital needs and raise resources for ROEs, beg your pardon, for SMEs in the trade chain, boosting consumer confidence. The key direct gainers from these tax cuts are autos, FMCG, durables, cement, insurance, quick service retailers, that is QSR, and alcohol players as well.
Okay, so that's a view from CLSA coming through. Let's get you one from Jeffries as well. And this is a view from Mahesh Nadurkar, who says the government's GST bonanza has come through and the government has moved swiftly to announce the GST cuts, with September 22nd being the implementation date. Festive demand hence should see a positive boost, though some negative demand impact would be felt in September. Most GST rate changes were expected or were on expected lines. Positive surprise came in for staples and ITC. Cement stocks haven't really moved since the August 15 announcement and should bounce now. And so should M&M, a strong positive for other autos also, but stocks have already moved up. So cement and M&M specifically, Jeffries calls out, should see a further leg up.
All right, let's just, and we'll get you more, right? So this is CLSA and Jeffries, but this is Finance Minister Nirmala Sitharaman addressing the media late into the night post the 56th GST Council meeting. Listen into some of the top announcements from the FM herself.
This reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living, so that businesses can do their business of working together with the GST with a great ease. Rate rationalization, of course. We've reduced the slabs. There shall be only 2 slabs. And we are addressing also the issues of compensation cess. Ease of living, simplifying registration, return filing and refunds. Levied on common man's daily use items have gone through a rigorous looking into. And in most cases, the rates have come down drastically. Labor-intensive industries have been given a good support. Farmers and agriculture as a whole will also benefit by the decisions we have taken today. Health-related also will benefit. So the key drivers of economy have been given a prominence. Man items such as hair oil, toilet soap, bars, shampoos, toothbrushes, toothpaste, bicycles, tableware, kitchenware, and other household articles have all come to 5, whether they were in 18 or whether they were in 12. Similarly, reduction of GST from 5% to nil. 5 से 0 में जाने वाले items indicate कर रहा हूं. Ultra high temperature milk, the UHT milk, chena or paneer, all the Indian breads will see nil rate. Reduction of GST from 12% or from 18% to 5. इसमें food items बहुत सारे हैं. नमकीन से भुजिया है, sauces से पास्ता है, instant noodles है, chocolates, coffee, preserved meat, cornflakes, butter, ghee, ये सब 5% में आ रही है. From 28 to 18% on small cars and motorcycles which are equal to or below 350 cc. Reduction of GST from 28 to 18 on buses, trucks, and ambulances. Uniform rate of 18% on all auto parts, irrespective of their HS code. 3-wheelers from 28 to 18 again. Reduction of cement from 28 to 18. क्योंकि घर बनाने में middle class के लिए cement इतना आवश्यक है, इसीलिए 28 it has come down to 18. Insurance services from 18% currently will go into 2-3 different categories. I'll say that to you. Exemption of GST on all individual life insurance policies, whether term life, ULIP, or endowment policies, and reinsurance thereof, to make insurance affordable for common man and increase the insurance coverage in the country. Exemption of GST on all individual health insurance policies, including family floater policies and policies for senior citizens, and reinsurance thereof to make insurance affordable for the common man and increase the insurance coverage in the country.
Right, let's take that forward then in terms of insurance. Yash joins us to tell us how does it impact the insurance space. Morning, Yash.
Morning, Nigel. So, of course, let's address the headline first. GST on individual life insurance and health insurance has been exempted. Also, what has come along with it is that exemption has come as far as GST and the reinsurance cost of procuring that life insurance and health insurance policy is concerned. So, that is as far as the GST rate is concerned. Now, as far as the sector is concerned, it would be one of the only sectors which has had its rate go down from 18% to exempt, but still won't be happy today. That's because it's a double whammy which has come with respect to the announcements yesterday for the insurance sector. One is that there is no input tax credit, which has been announced by the government. The category of exempt does not give provision for input tax credit, which means that it will contain or restrict insurers' ability to offset any cost which they incur in procuring the life insurance or the health insurance premium. That is the first negative. The second negative which has come in is that the inverted duty structure has only been sort of corrected for the reinsurance cost which has been exempted. That is just 30 to 40% of the total cost which the insurance company incurs in procuring the health insurance or the life insurance premium. The balance 60-65% cost is commission as well as claims, but that's where the inverted duty structure still remains, which means the 18% GST on those services would still remain. I've been speaking to the industry players and worked out some numbers myself. Now, if the reinsurance cost would not be exempted on the reinsurance part of it, then it would have led to a 7 to 10% increase for insurance companies on every policy. But now, since the reinsurance cost has been exempted, that expense or the deficit on every policy comes down, but it still remains to be about 5 to 7% for insurance companies. Now, of course, there are three scenarios. Either the insurance company takes that hit on its own books of that 5 to 7%, if that entire 18% benefit has to be passed to policyholders, or it shares that cost with distributors like Policy Bazaar, in terms of the commission.
Yash, thank you. Thank you very much. It's a complicated, I think out of all the sectors, insurance in terms of the GST cut impact is the most complicated one. But that's good explanation, and we'll talk to companies as well. But we are joined by Anish Shah, Group Chief Executive Officer and Managing Director of Mahindra & Mahindra. Anish, good morning. Great to have you with us here. Glad that you're able to join us. Rajesh Jajurikar is also with us, ED and CEO, Auto and Farm Sector at Mahindra & Mahindra. Rajesh, great to have you with us bright and early as well. Anish, if I can start with you, these are big rate rationalizations. You're smiling, you're happy in terms of what has been done. So your first reaction to what is done, and then specifically, if you can tell us, Anish, what percentage of your fleet would now fall in the 18% slab, and what percentage of your fleet would be in the 40% slab? 18 and 40, the two relevant rate slabs now. Go on.
Let me start first with the overall impact on the economy. And to me, that is the biggest factor in this change. It is a very dramatic one. It ushers in a new era. It is a very dramatic one. It ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should in some ways create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way. I'll let Rajesh cover the details from an auto perspective in specifics, but from overall economic.
மாண்புமிகு தமிழ்நாடு முதலமைச்சர் திரு மு.க. ஸ்டாலின் அவர்களின் முன்னிலையில் லாய்ட்ஸ் லிஸ்ட் இன்டெலிஜென்ஸ் நிறுவனம் தமிழ்நாட்டில் குளோபல் கெபாசிட்டி சென்டர் அமைப்பதற்கான ஒப்பந்தம் கையெழுத்தானது. இதன் மூலம் கடல்சார் தரவுகள் மற்றும் தகவல் தொழில்நுட்பத் துறையில் 200 புதிய வேலைவாய்ப்புகள் உருவாக்கப்படும்.
Rate reduction as well, which I think is a big positive for Mahindra. Go on.
Yeah, so Prashant, like Anish said, we're delighted with the news overall. It's a huge enabler to demand and consumption. Markets have seen some kind of a slowdown over the last few quarters, and I think this will be a very good boost, timed very well with the start of the festive season. To the specific of your question, I actually want to you got to see the auto and farm business, which is key part of the M&M Limited company, as a sum of three key segments: the tractor segment, which is tractors and farm machines; the commercial vehicle segment; and then the SUV segment. So tractors gets a big boost, 12 to 5%, which will lead to prices coming down 40 to 60%. And that on an average basis, we do about 35 to 40,000 volume a month. Then we have the pickup portfolio, which is LCVs less than 3.5 tons, which will move from 28 to 18, which is about 25,000. So I'm just giving you these broad numbers so that you get a context of the volume. Our SUV portfolio is in the region of 45,000. Roughly 40% of that will be in the 18%, and 55-60% will be in the 40%. But we have to keep in mind that we also have EVs, which will be in the 5%. So overall, if you kind of were to leave out the 40%, we have a very large chunk of volume pickup plus SUVs in the 18%, and then we have tractors and EVs in the 5%.
Rajesh, around 40% in the 18% overall. Would I be okay in the ballpark?
No, it will be higher when you add the pickups, the commercial vehicles. So it will be almost 65% when we add the commercial vehicles as well.
In the 18% slab.
Numbers, it includes commercial vehicles as well.
Okay.
Yeah. Mr. Jejurikar, hi, good morning, sir. And Mr. Shah, thanks so much for joining in, both of you. Mr. Jejurikar, if I could ask you, I know it's very early, but maybe your team has already done the back of the envelope calculations. If we talk about the full revenue of the automotive segment, let's leave aside farm equipment. So if you talk about full year revenue, then is there a way of gauging that, what part of the portfolio, with the volume breakup that you just gave us, what part of the portfolio or what percentage of that revenue gets a positive leg up because of the reduction to 18%? And what part perhaps, which will be few, which go into that 40% category? So that percentage of the revenue, perhaps you have to see how the volumes play out.
No, every part of the portfolio will get a volume up, Surabhi, because 40 is also benefit of 8%. So what was in 40 was 48%, including the cess. Yes. Even there's an 8% benefit. So every part of our portfolio gets a leg up. EVs are unchanged, but everything else gets a leg up between 8 to 13%.
Yeah. And the other question, and maybe Mr. Shah can also come in on this. Overall, sir, what's going to be the thought process? I mean, does everything get passed on to the customer, or will you have to take a slightly more nuanced call on this, depending on other input prices and other compulsions? I mean, how do you look at it? Should, for M&M and the industry across the board, do you expect all of this to be passed on or not? Mr. Shah?
We expect all of this to be passed on. This is meant for the consumer, and the GST cut should be passed on to the consumer in full.
All right. Hi, good morning, gentlemen. Thanks a lot for joining in. Rajesh, coming across to you, you said the tractor rationalization of GST cost will ultimately bring the tractor cost down by how much?
50 to 60,000, depending on the horsepower category.
50 to 60,000 rupees, right?
7%, yeah. 40,000 to 60,000, depending on the horsepower category.
Got it.
That's the 12 to 5%, 7% drop.
Okay. All right. Got that. But what about in the interim? This comes into effect from 22nd. So in the interim, will that create some kind of uncertainty, postponement of buying? How do you see customer behavior move?
There will be transition issues, Nigel, and in any transformation, there's going to be transition issues. So, we would expect the next three weeks or so to see some kind of a wait and watch. There are some issues related to compensation cess, which SIAM will take up with the government separately. But overall, I think the sentiment is very positive, and we see this as a very long-term demand driver. There will be a little bit of wait and watch through September, which may affect September volumes as customers wait and watch for the effective date of 22nd September.
And Rajesh, you're saying including CVs, 60% of the portfolio will be in the 18% bracket now, right? That's what you said.
60% of the auto portfolio. If you add tractors, it's higher.
Of course.
which is at
Anish,
5%. Yeah.
Yeah. Anish, can you give us a slightly top-down view on, I mean, what you began by saying, right, which is the consumption boost and what it does to growth overall? Because, the second derivative, third derivative, etc., can be quite meaningful, which is very difficult to immediately put numbers to. So just your thoughts there, Anish.
So what we've seen is the economy has grown roughly at about 7% or so for the past couple of years. And as a result, private investment hasn't gone up as much. Capacity utilization has gone in the 75 to 80% range for many industries. So, Prashant, as we think about the economy overall, I strongly feel that this could be the one factor that really starts driving that private investment. We will start seeing consumers get a much more positive view, and that sentiment is an important one. As that happens, companies should start investing more. We're already starting to think about how do we create the supply for this, because we will need to ensure that the supply is there for that demand. And that, in effect, would be one that really starts driving private investment, which has been an important factor that's been missing so far.
Anish, is there any way, and I'm not talking for specific numbers here, but is there any way for you to give us a sense of the multiplier effect of this on, say, auto volumes? And if you can talk about Mahindra and Mahindra, what the leg up, as Rajesh said, every part of our portfolio will get a leg up pretty much. So in terms of volumes and the bump the volumes get because of this, in the ballpark, what's your sense?
Prashant, a little early to say that at this point. We've also been in a situation where we've been growing mid to high teens from an SUV standpoint, while the industry has been very sluggish. And for us, it's a product set that has enabled that to happen. So we will see a further growth rate increase, but the extent of impact is something that we will have to wait and see as to what the level of elasticity is to prices, and how significant that will be. But again, from where we sit right now, we expect this to be a significant boost.
All right. Just one more question I had, gentlemen, because I wanted to ask about how the tractor inverted duty changes. The reason I ask this is because the GST is reduced for tractor, but the input of steel, there the duty is largely unchanged. So how do you manage this?
There are, Nigel, I haven't gone through all the parts, but we have seen a list of parts. So the government has tried to work on the inverted duty structure for tractors. And there are a list of parts which are tractor specific, which have been called out, which will be at lower duty. So, but I need to go through that full list to see what percentage of the input credit it impacts. It does lead to some kind of a working capital blockage, but that's insignificant in the context of the overall upside that will come out of this pricing boost.
Got it.
Mr. Shah, sir, finally, going back to the overall point, to what extent, how should we, interpret or imagine the sort of boost, and whether it's going to be a lasting boost to consumption and specifically to the auto sector that these cuts will yield? Given your monthly run rate, of course, there'll be an immediate bump up, I guess, all the pent-up demand, maybe in the next 2-3 months, especially in the festive season. So by how much more than the average anticipation would you expect your volumes to go up? And then is it a one-time bump up? Or how should we look at the longer-term impact of this?
So the basic impact will be is the fact that with prices coming down, demand should go up. In terms of specific numbers for us or for any particular company, it is going to be difficult to say, but it will be a longer-term impact. What I could say is, from a macro basis, I'd expect this to take our growth rate as an economy to greater than 8%, and for us to be somewhere between 8 and 10% over the next few years.
Okay, so so we're going to take that and pull that flash out that Mr. Shah thinks that the GST cuts can take India to 8% growth rate in terms of an economy. And again, Rajesh, if I could ask you the question, so if you were expecting X as your festive sales number, will it be X plus 20% now, X plus maybe 25, 30%, just so that we can wrap our heads around the size of the impact?
Yeah, you clearly don't give up, Surabhi. So
Just trying.
I think, Surabhi, the reality, as Anish said, is there is limited time to capitalize the upside in the festival period. We are literally 20 days away from the festival period. We can't increase capacities or production outputs. Festival period is a 30-40 day period. So I honestly don't think we're going to get a wholesale billing upside in the short run. This is more a long-term game.
All right. I'm so glad that both of you could join us. Anish, thank you very much for being here on the channel, explaining the impact and what many believe is the one company which perhaps benefits the most within the auto space. Rajesh, glad you could make it. Thank you very much for joining us here on CNBC TV 18. Gentlemen, goodbye.
Bye. Thank you, everyone.
All right. Well, that's Mahindra & Mahindra with a rounded sort of perspective on the top down and, of course, a bit about the bottom up as well. So, and we'll, as I said, continue to get you reaction after reaction across sectors, cement, consumer durables, and so on and so forth. We'll take a quick commercial break here. As I said, with insurance, it's a little complicated, the exemption on policies, life, etc., health, etc., will that translate to premiums going down? The answer is not an easy yes. Niva Bupa Health joins us on the other side with exactly that. Stay tuned. By law.
Welcome back. Decoding the impact of all of those mega GST cuts. You just had heard a comprehensive conversation on autos. We'll get to insurance in just a bit. But in the meantime, let's also not forget there's a trading market and we have to look at what commodities have been doing as well. Manisha is joining in. Manisha, morning. What are big headlines?
When it comes to GST, well, I was talking to cotton and textiles and agri, and input costs clearly have been rationalized as far as GST is concerned. So a big cheer coming in from there as well. But when you look at the international markets, where the headlines still coming in from gold now, where it is the fourth straight day where you have record high continuing in case of gold prices. $35, $70 an ounce has been broken now, and with that, we have seen the gold prices gain up by 37% in this year. Silver also continues to gain a new 14-year highs onto that one. And with that, silver is up 42% in this year as well. So very strong going when it comes to precious metal prices there. Markets are now looking at the soft US jobs data, which is reinforcing expectation of a September rate cut. And if you look at the CME Fed tool, there is now a 98% chance of a 25 basis point rate cut in the month of September. In focus now is going to be the US jobless claims, ADP employment, and then you have the most important Friday's non-farm payroll data coming in. So promises to be a very exciting next 48 hours in the international markets from here.
Okay, all right, Manisha, thank you very much for all the updates. As promised, let's now get to the insurance sector to understand what this means for companies and whether as consumers we indeed have something to cheer about or not, given that both life and health insurance policies have been moved to the exempt category. That's what the big announcement was. Also, GST on reinsurance cost has been moved to exempt. This confirms the CNBC TV18 news break. We have Ankur Kharbanda, Executive Director at Niva Bupa, joining in. Thanks very much for being with us, Mr. Kharbanda. Now, this is just explain what your understanding is that now life and health policies, when we pay premium, it's at exempt. But the problem is, I think that, you don't get to claim input tax credit. So what happens? Will you have to adjust by actually hiking premiums? Will you look at absorbing it? Your first thoughts on this?
One is the customer will get this benefit. It's an 18%. It's almost 1/5 of the premium which customer was paying earlier. So he gets a big 18% adjustment over there. The second question, do we get the input credit? Because now it's into exempt mode. As of now, there is no big clarity, but assuming, we will get some more clarity after this. But we have three costs. One is reinsurance cost, then is our operating cost, commission cost. Reinsurance is also exempted. So hence some of our costs will get, there, which is waived. The rest two costs, which is the commissions cost or the other expenses, etc. cost, that is something which will not get the benefit out, and that's what we need to figure out. How do we manage this? Because we want to give the benefit to the customer. We want to give.
Sir, just so if I can just make sure that we're clear, we're understanding this clearly. You're not looking to hike premiums. Whatever adjustments have to happen, whether it's with distribution costs, whether the company looks at it, the fact that reinsurance costs, that hit comes down, it'll not happen by a hike in policy premium. Is that right?
We're not looking at anything which is, giving on to the customer. We want to give this to benefit to the customer. We don't want to increase premium as of now. We still want to assess this, understand this in terms of what impact it has. But as I said that, this is an historic moment. We would see a lot of customers getting in. We would see a lot of...
Yeah, no, absolutely. Let me just ask you this. That's a very hesitant answer. You obviously would not want to hike premiums immediately. But does the math as it stands right now, do you need to compensate for the no input tax credit and the 0% on policies? Does the math necessitate a hike? Let me put it that way.
There are various factors we need to consider. Does it
just a short yes or no, Ankur? I'm sorry to push you.
Immediately, no price increase.
Immediately, no price increase.
What is the definition of immediate, Ankur? Immediate is 1 month. 3 months.
We need to assess this. We need to get more clarity. But we want to pass on this to customers. This is an historic moment. We should celebrate this.
Absolutely. All right. Hi, Ankur. Good morning. Good to see you. Let's focus on what we know then and what we can understand from what we have. Reinsurance cost, that'll come under GST exempt category, as you mentioned, right?
Yes.
How much does reinsurance cost form of the total cost? And how much does commission and claim cost form? If you could break it up for us.
So it depends upon various policy sets. For individual policies, it's different, and corporate policies, it's different. And we have reinsurance treaties every year. It changes. But if I have to give you just a overall estimate in terms of how much is the overall cost, all input cost, assuming if it's 1/3 is reinsurance cost, and the 2/3 is other cost. That's how we have divided this as of now. 2/3 is other cost, whereby we do not get the input credit today.
Are health policies reinsured?
Yes, for us we do that. Do that. It's dependent on each individual organization. How
Typically, compared to other segments, the rate of reinsurance in health is lower, as I understand it. Is that correct?
Lower. Yes, it's lower. Yeah.
Okay. So in that sense, I mean, that benefit also perhaps is a little lower.
Correct.
Yeah. I'm sensing a premium hike 3 months out, Ankur. If I can put it that way, but
I can't
as you
say
said,
that, but I can just say that we want to pass the whole of this to the customers.
The other thing, of course, you will because I pay I pay 118. You collect 118 from me. You give 18 to the government, so I'll pay 100 now. So that is there. But the point is, on premiums, there will still be we'll see how it goes.
Overall growth will go up. My operational cost will go down because of that. So there'll be some benefits also coming from there. So we need to adjust all of this before we can.
Although I must say, health is I mean, you will take a health insurance policy. You don't wait for premiums up or down, right? It's a necessity. Those who want to.
Yeah.
Should this necessarily be a boost? It's great news.
It's a great news, yeah.
But it should not necessarily push up volumes or increase penetration in that sense, right? The cost aspect of it.
It will, not the cost perspective, but overall the business, the revenues will definitely go up because of this.
And also on that, Ankur, simple argument, but it just seems logical, because if the price comes down by as much as 18%, I mean, if you pass on everything, then more inclination to move towards more premium policies, the more value-added plans, etc. So within the mix, what are the changes you'd expect? And therefore, what can be the business impact in Q3?
I sense at Niva Bupa that there'll be a lot of things. Senior citizens we saw that they were reducing sum insureds after some time. They would probably look at for a better cover and more sum insured. The young age, mid-age population who was seeing this as not a very important thing, a lot of new entrants will come. Tier 3, Tier 4, whereby it is not a priority today, health insurance, they will get into priority. A lot of value added, 60% plus of our cost is on outpatient. People were not buying health outpatient policies because there was an 18% tax on it. We see a lot of pull coming from the market on OPD as well, outpatient as well. So these are the few segments which we see will have a good uptake.
Yeah. Look forward to paying lesser premium on my renewal next time. All of us here, actually, all your customers, etc. as well. Thank you very much, Ankur, for joining us. And
Thank you.
We'll continue chatting, depending on, I mean, what happens on the ITC, because that, of course, is a thorn with regards to insurance. And I mean, but for the customer, from a customer perspective, there is that 18% which goes away now. We'll take a quick commercial break here. We're going to come back. Deepan Mehta is going to be with us of Elixir Equities. He's going to tell us what to do in terms of stocks and what should do well on the back of what we've seen last night. Stay tuned.
Welcome back. Hope you're having a good morning. Well, it's good indeed because we have the GST rationalization that's going to be playing out in the month of September itself. And most of their questions have got answered late last night. Deepan Mehta, though, he's the man in the hot seat, Director of Elixir Equities, who joins us. Hi, Deepan. Near term, there could be some kind of skittishness with regard to demand. But in the longer run, this is going to be very, very good, right? Could you tell us, if you were to give us two stocks that would be the top beneficiaries going by what we have heard on the GST rationalization front? Could you name them?
Yeah, Nigel, good morning and thank you for having me on your show. I can name only one stock and you'll be surprised. That name is Bajaj Finance because it is all encompassing all the GST benefits which come through, whether it is appliances or whether it is automobiles. That is one company which clearly benefits from higher demand for its loan products because a lot of these items are bought on EMI. And that certainly is going to benefit the volume growth for Bajaj Finance. So it's one, the kind of the best way to play this GST cut is through a NBFC like Bajaj Finance, which is India's largest consumer finance company and a formidable player in vehicle finance as well. Having said that, it's a company which we and our clients are invested in, and so our views could be biased to that extent. And of course, the second company, if I had to name, has to be M&M. I heard the interview. The management is quite guarded, but I think that internally, they may be rejoicing these cuts which have come because they are clear beneficiaries over there at a time when there's good momentum behind their products and the new offerings have been received so well. This clearly is going to be a boost for M&M and may lead to even higher market share for them. Maruti will benefit, but as I said earlier also, that the cut in EMI for small cars not material enough to really drive growth.
No, absolutely. What else, Deepan? On insurance, what is your sense? I don't know if you heard the Niva Bupa management, right? As one of the newer ones, but what we're picking up is kind of a mixed bag. So it'll be a strange situation if you actually see some red on insurance names this morning as we open up. I don't know, but what your thoughts, Deepan?
No, Prashant, you're right. There's no confusion. Okay, whatever services they are taking, whether it is telecom services, internet services, commissions which they pay, a lot of other expenses except reinsurance they're going to pay GST on it. So effectively, I'm not sure how much of a reduction we will see in our premiums because initially I think they may bring it down to zero, but eventually when they recalibrate it, they may have to increase the insurance premium because all of these GST inputs will not be available and they will just lapse. So net you will see, of course, a reduction, but don't expect like from 18% to zero means an 18% reduction in the premiums in the longer run. So that's my view. Apart from that, I think one segment which needs attention here is also the apparel segment. And retailing companies like V2 and Vishal Mega Mart, to an extent even D-Mart, they also benefit because the GST has been cut from 12% to 5% for a lot of the items which are below 2,500. That even benefits footwear companies, low cost footwear companies like say a Bata or something. And that could also be a boost for demand at a time when the festive season is also looking very good. The marriage season is looking good. So this is an additional trigger for retailers which are in tier 2, tier 3. I think Trent also may be a beneficiary because of its low cost offering. So that's also could be one of the stocks of sectors worth looking at and analyzing from a GST cut perspective.
Absolutely, yeah. I'm glad you put that on the radar as well. So, apparel below 2,500, footwear below 2,500, and V-Mart retail, Vishal Mega Mart. I mean, these are the big names in that particular category at those price points. Deepan, just going back to autos for a bit, two-wheelers. Now, Bajaj, Hero, and Eicher. Let's take all of them very quickly. The biggest beneficiaries, I don't know, I mean, we know that Hero obviously is, Eicher, a small part of their portfolio is above 350cc. But from a stock positioning standpoint, and Bajaj Auto has been a big underperformer. So between the three, how would you spread your bets or place your bets? All three, 1, 2, 3, or none?
No, I think Hero MotoCorp, it's been an underperformer. And clearly, they benefit from the price-sensitive sector, entry-level consumer commuter motorbikes. So I would go with them. Valuations also are reasonable. And I think if the export pick up for Hero MotoCorp, you could see it inching up as compared to its competitors or peer group as far as stock returns are concerned.
And what about the Royal Enfield? I'll tell you what, Deepa, and just to give you a live, real case incident. To 2008, I went to buy a bike. I went to buy that the normal standard, which was 85,000. I ended up buying the Machismo, which was 125,000 at that time. 2008, I'm talking about the 500cc. So for Royal Enfield fans, actually, it doesn't make much of a difference normally. But what is your take on it? The stock is not very cheap as well.
Nigel, every time we have the discussion on Eicher Motors, and this is what happens, I don't think this is a trigger for Eicher Motors, but I think the company is on a roll. Exports are doing well, domestic sales are doing well, the expansion of retail network benefiting the company. And I think high valuations clearly justified. You can see the monthly numbers also coming through, really well for that company. Having said that, it's a company in which we are certainly interested in as shareholders.
Yeah. Deepan, what we'll do is take a break here. We're going to talk about one more name, right? Aptus Value Housing, and we'll get your reaction. You talked about, briefly mentioned financials as a space. So stay with us. We are back in just a bit. Okay, welcome back. 3 minutes to go for the pre-open session. We have Aptus Value Housing, which should be in focus as well. Nimesh is standing by to tell us the reason. Nimesh, tell us.
Hi, Prashant. So the block is done in the block window. So it's a clean out trade. Westbridge has completely sold out. They've sold their entire 14.5% stake in Aptus Value today via block deal. The size was close to 2,600 crores. So so a couple of things. One, there is no leakage because it's done in the block window. Two, the supply overhang would be out of the way now that because it's a clean out trade from Wedgebridge. Again, I understand from a buyer's perspective, one large long only fund was an anchor investor along with some domestic mutual funds. So disclosures will come in the evening, is my sense. But it's a done deal now. Done in the pre-open itself. Westbridge has completely exited by selling its 14.5% stake in Aptus Value today.
Okay, so it's done 2.5% higher. The pre-open will be with us in about 2 minutes and it'll give a sense of how things are starting. Nimesh, thank you very much. We'll get you some brokerage calls as well, which have come through in a bit from now. We're going to come back in just a bit from now with the technical trading ideas and also the management of Birla Corporation, because cement is in focus as well. Stay tuned.
Welcome back. Well, we are at 9 o'clock, so we'll start getting the pre-open rates, and the first of them are coming through. So if you go by the Sensex, and we'll wait for this to settle, the Sensex is up 1% as of now. Nifty rates will come in just a bit as well. Let's wait for them to come in and settle down. Let's look at, of course, more reactions, more commentary that's been coming in on some of these landmark GST cuts. ITC Chairman Sanjeev Puri has said that the proposed GST cuts can provide good momentum to the economy. He also believes that the tax cuts can boost consumption, which has been lagging due to elevated costs.
This is a very bold step that the government has taken. It's the Honorable Prime Minister announced it on the Independence Day. And I think it's going to have multi-dimensional impact, because it's not just about rate reduction. It is also about simplification. It is also about ease of doing business. So the changes are multidimensional, and impacts are going to be even more profound. I think it's certainly going to make things cheaper for the common man. So it will fuel consumption. It will lead to a lot more formalization of the economy.
Okay, so more reactions pouring in from the leaders of India Inc. Let's get to our technical experts now and see how you need to navigate a big day like today. Sudarshan Sakhani and Mitesh Thakkar are with us. Gentlemen, good morning to both of you. So we're gearing up for this gap up open. The question is, what do you do from that point onwards? Mitesh, let me open with you. Index trades.
Good morning, Subhi. So I think, we've been maintaining that the markets will possibly head towards the upper end of the range, given the fact that, we were oversold on the PCR levels, plus we were near the 24,400 mark, which has been an important support area. I think the midpoint, comes around this 24,800, 850, and that is, we might just open above that. that should suggest some kind of continuation, and we might actually even test 25,000. In case we see further strength, then 25,150 is the upper end of the range. I'm even looking at a possibility of Nifty heading over there. So in the short term, the bias is very clearly positive. The worry in the entire pack was Bank Nifty in the last 2 days, but the Bank Nifty yesterday gave first signs of reversals. So getting past 54,200, and obviously that will happen in the opening itself, would suggest that the Bank Nifty could also head towards 55,000. So all in all, good chance that we might actually head towards 25,000 or even 25,150 in the next couple of days.
Okay. Sudarshan, morning. What would your approach be if we get this gap up as anticipated?
Yeah, good morning. See, there are two different trades. The first is for people who went and bought yesterday morning when that was a suggestion. For you, the trade is to take profits on half your positions and keep the other half. Just assume that you've bought it today, the other half. For those who don't have any positions, the trend is up. Look for a minor intraday dip and buy the Nifty. The chances are that we could, as Mitesh said, even I think we could reach 25,000 sooner or later.
And which is the better index to take that long trade, even if it's an intraday long trade, if you buy an intraday dip, which is the better index, Nifty or Bank Nifty, Sudarshan?
It would be the Nifty. It's much easier to predict and sort of decide on.
Okay. Mitesh, tell us if you concur. And of course, let's talk stocks as well. What's on your stock list?
On the stock side, I have all buy calls today. The first one is APL Apollo. Good crossovers on moving averages indicators suggesting upside. So buy here with a stop below 1652. Look for a first target of around 1720.25. Then a buy on Crompton. That's a stock which gave a breakout and then last 2 days has given a pullback. So gives a good entry point here. Buy with a stop below 328 for a target of around 345. A buy on Glenmark, which after good corrections, correction in the price is showing first sign of a reversal. So buy here with a stop below 1975 for targets of 2070. And Tata Steel, metals have been doing very well, and steel, the ferrous metal stocks have done extremely well. So Tata Steel made a fresh swing high. Buy with a stop below 165 for a target of 175.
Okay, all right. Gentlemen, thank you very much, both of you.
Sudarshan.
Okay, Sudarshan is, apologies. Gentlemen, morning. Sudarshan, your picks, what would you trade?
Well, I'll do it quickly. Oil India is a buy with a stop under 394. BEL is a buying opportunity with a stop under 371. Siemens is a buy. 3147 is the stop loss, 3147. And I have a common name, Glenmark. Glenmark is a buying opportunity with a stop under 1967. Stay long.
Okay, all right. Thanks a lot for that, gentlemen. Well, there's a big boost coming in for cement. GST on cement has been reduced to around 18% from around 28%. To help us out with what's the impact on the sector as well as on the company, Mr. Sandeep joins us, the MD and CEO at Birla Corp. Hi, sir. Good morning. Thanks a lot for joining in. Well, GST rationalization has come about. The entire industry was talking about this for the last many years. Firstly, how much do prices come down by? Because all of it would likely be passed on. And what kind of impact can it have on demand?
See, first of all, prices will come down approximately, as they're saying, 10 rupees. So it would come down in that region, I would guess, 10 or so. That's how broadly once it kicks in. That's after 22nd. But before that, one will have to see that you have to actually segregate between the short term and the long term. First of all, the next 2 weeks, I think it's going to be a slump. That's because, when the corrections are coming from 20th, trade down stocks, when you're seeing the prices going down. So September is not going to be such a good month for the industry, is my reckoning, both in terms of volumes as well as in terms of pricing. And thereafter, things will stabilize over there. And that will be, as you are saying, you'll probably see a correction about 10 to 15 rupees, depending on the region, depending on how the balance is.
Okay, got it. So, the broader view is that September could be a little bit softish, but because of this rationalization, it could spur demand. Earlier, you were talking about 7 to 8%, demand growth. Do you think that's possible right now, taking into account, that there's going to be some softness in the near term? And do you want to up that estimate?
See, first of all, it's too early to really make an prediction on the overall demand scenario. But I see the demand will get triggered not just by the correction of the cement duty. Where the monies will go into the hand of people is the all across reduction. So, be it in consumer goods, be it in other building materials. A lot of other building materials, as you know, they have also the duties have come down. So that will give more money in the hands of the home builders to go in for, and it should give a boost to the IHB segment. See, infrastructure demand would be by and large inelastic. I'm talking about the large infrastructure. Where you're going to see the difference is a lot of this will trigger the rural demand. It'll trigger the development total expenditure in Pradhan Mantri Awas Yojana and those sort of projects that will take out. There you will see a positive impact. But the bulk of the impact will come, I think, from the retail sector. And that is where people like us who have a high volume of blended cement, high volume of what we call the trade sales, as opposed to non-trade, which is the industrial, the big infrastructure, they are to benefit a lot.
All right. So a couple of aspects here. The street believes that maybe there could be some margin, gain as well, because maybe all of it or most of the pricing will be passed on, but operating leverage will help and focus on premium sales will help. And as you said, I think trade sales for you is around 70% of the mix. Is that correct? And out of trade sales, close to around 55-60% is premium. So do you think people will go in for higher amount of premium now, premium products?
See, premium, when you talk of, there are two ways to look at it. If you're looking at it from your market standpoint, you have to see the people who are operating at the higher price band. And there are people who are operating primarily on the higher price band. So if they have a strong brand pull, they have a pan-India presence, you will see some of the benefits coming in there. And for smaller players who have a mix of premium and what you call popular or the value segment, obviously they could see an uptrend on the premium, which has been generally, as you will see, a trend not only in cement but in a whole host of industries. There is a premiumization going on, and if things become more affordable, you'll find especially the individual consumers who are now more aspirational, they are going to opt for the branded and the quality products.
Okay, all right. So there'll be some kind of downtick in terms of pricing. Demand for the year, you're working with high single digit, right? 7 to 8% cement demand growth.
We'll really get to see the demand post the festive season.
Okay.
Because there are various factors, it'll be too early to talk of. The monsoons has an impact. Some say the monsoon, the heavy rains could dampen a bit of the agricultural demand, etc. So I would not right now rush to predict a demand upsurge, but it'll sort of balance out between everything. As you said, if there is a price drop, there'll be certain benefits for price drop to people. It's not all because the coal, that's a big ticket, I think.
So just want to clear, sir, two more points. One is on SGST, because states effectively, now they'll get lower amount of money by the GST route. So will it hit incentives for a company like yours? Do you see it as a risk? Point number one. And the second point, sir, is on coal. Coal, the GST has been up to around 18%, but they're done away with cess. So effectively, that doesn't, increase cost for you. Could that be positive on the margin?
Coal would give people who are highly dependent on domestic coal, I think it'll give them a benefit because of the cess removal. That's the big thing. Because the other GST is going to get offset, that's an input credit, which you will get by and large. So that increase is not going to hit the bottom line straight away, but that cess reduction, especially for people or regions where people are dependent on domestic coal, I think that will be a positive.
That'll be positive, but the state GST, could it be a risk?
State GST is slightly more complex. There are two parts to it. Those are capital, capex-based incentive. You may have a short-term thing, but the overall the quantum of GST is not going to get affected as GST. And also, if there is a cap, most of the states have a cap, annual cap. So if people are already meeting that cap, it is not going to hit their absolute numbers in terms of number. In terms of the market, I think it should be healthy for the market because it will create a more level playing field. There are some players who were heavily dependent on incentive, and they will now have to be more prudent in how their pricing goes.
Got that. Thank you very much, sir. Thank you for joining us and running us through first thoughts as far as the GST cut is concerned. Let's get back to the market. 2 minutes to go for the market open. We're going to just